Hello, everybody. My name is Maurice Wootton. I'm the CEO of City Financial Global, and it's my great pleasure today to be interviewing James Wootton, who's the corporate partner and co-head of equity capital markets at Linklaters. James will be speaking at the Future of Capital Markets Regulation Summit on the 25th of September in central London. James, welcome.
Good morning.
Very good to have you with us. Let's turn to the questions. There has been a steady decline in the number of companies listing in London over the last 10 to 15 years. How much of this do you think is due to a move towards raising capital privately, and how much is due to competition from other listing venues?
It's a great question, Maurice, and indeed it's definitely a combination of the two. It's been a noticeable dynamic of the last 10 to 15 years, as you say, that the availability and the prevalence of private capital has really come to the fore and has changed the nature of the public markets.
Yeah.
Part of that has been driven by big macro factors, including the sustained period of low interest rates, coupled with the continued rise of private equity, the rise of VC, and other sovereign wealth, other pools of private capital, as tech companies in particular, but high growth companies have been able to stay private for longer. So that's been a major factor. And that's been a factor globally. So the extent to which it's a London issue and increased competition. I mean, normally competition increases. It forces stock exchanges around the world they've always been competitive in competition with each other, but it forces them to look at ways to make themselves more attractive. We've seen a look at it, in particular, London versus New York, London versus Amsterdam, London versus Asia in the last few years, but it's definitely always been a dynamic in the way the stock exchanges have operated.
Yeah, I mean, that competition, as the centre of economic gravity shifts eastwards more and more, and you see the steady growth of the middle class in China and in India willing to invest their wealth potentially in local stock markets. Where do you see the biggest threat to London in the future? Is it going to be the US? Is it going to be other bourses in Europe, or do you think it will be in Asia, which is the most rapidly growing area of the world?
Look, anything can happen. The game is up for grabs. London absolutely has an opportunity, in particular with the regulatory freedom that we now have post our departure from the European Union. London has the opportunity to position itself as a sort of global centre for the convening of capital, as it's always been, but in particular geographically positioned between the US and Europe and Asia, that actually London can really carve out a place for itself. But of course, every other exchange is trying to do the same thing. Are we going to suddenly have a depth of capital that will rival the depth of capital, the pool of capital available in the US? Well, that's not going to happen overnight. Are we going to match the economic power of China and India and so on combined? No. So London has to think long and hard about what it is that we're offering. What is it that can make us globally competitive? And where do we have a head start over the rest of the world? And that frankly is in things like the prevalence and the quality of English law and the quality of our financial services infrastructure, our advisory community, just by virtue of history and what we've achieved as a city and as a jurisdiction over the last 100, 200 years has brought us to this point. And that's what gives us a fantastic foundation that we now have to build on and to ensure that we continue to be competitive.
Do you think the proposed changes to listing rules are going to be a vital component in the London offering?
That's right. I think they're a necessary but not a sufficient condition, if I put it that way. That we need to do them because a lot of good work was done by the regulator and by various industry bodies to look at what are the reasons why people were choosing either not to list or to list somewhere other than London. And so one by one, the regulator's been going through those points and saying, well, do we really need that bit of regulation? If it's proving barrier to entry, why do we need it? Does it really add value? And the regulator's absolutely gone through all those things. So we've looked at dual class shares, we've looked at free float requirements, now looking at continuing obligations, at prospectus requirements, at the sponsor regime, all sorts of elements of this, which is like, well, what in the great sort of balance that we're trying to achieve between regulatory gold standards and investor protection gold standards and flexibility for companies, do we need to just shift the line a little bit? So yes, absolutely. I think it's essential that we're taking some courageous action. I wouldn't say it's necessarily drastic, but some courageous action on behalf of the regulators and the city generally. Is it enough on its own? No, it's not enough on its own. There's only so much that regulation can do. But the good news is that the government, the stock exchanges, the regulators, the industry as a whole is aware of that, and they're not looking at it as if the changes to regulation are all you need to do. About reforms of pension funds, about changing a little bit of a mindset in the nature of investment in the UK, seeing if we can reinvigorate retail investment, for example, general financial education. All those things are part of the solution.
And I guess trying to get more investment from pension funds and institutional investors, when you look at how that percentage of investment in the UK stock market has decreased over the years, and that's got to be a key part of it, presumably. And the government's obviously keen to get investment into technology companies. Do you think that New York has an advantage in terms of its culture, its willingness to take risks on technology companies versus a listing in the UK?
I don't. I think it's too easy to generalise about that, as many people have done in the press and otherwise, about different attitudes to risk. That there's always a spectrum of investors looking to take different sort of risk-based views and different investment decisions. That's the case in the UK. That's the case in the US, and of course, any investor, we can access US investors through companies listed in London. So I don't think it's so much that, but I do think that what you can create in a jurisdiction and a listing venue like London or like New York is a virtuous circle where a great company lists and does well. Investors make money, they like the company. So an ecosystem grows up around that, where more investors come, and then when the investors come, analysts start writing research. And then that encourages peer companies to list, and then more investors come. And then if you get, in particular within a particular sector, you get pockets of very strong expertise. And in the US, that's happened very successfully with tech, biotech, with life sciences, and so on. And that's absolutely what we need in the UK, is something just to that circle moving in the right direction. And the large number of very high quality, not just tech, but of high growth companies in the UK gives us every reason to be optimistic that we have the companies, and we have the capital. What we're now looking to do is take as much friction out of the process of bringing those two parts together to ensure that the UK remains the venue of choice rather than the US or indeed anywhere else.
Well, on that very positive note, James, thank you very much for sharing those insights with us. And of course, we'll be discussing these issues in much more depth at the future Capital Markets Regulation Summit on the 25th of September in London. We very much hope our viewers will be able to join us in person there. So, James, many thanks, and see you at the event.
Pleasure. Good to speak to you.